What's up, millionaires? Mitch Durfee here, and I am so excited about this video because in this video, I'm going to show you guys how you can become a millionaire by investing in real estate. Now, there are three ways to generate wealth through real estate, and those three ways I'm going to cover in this video. But before we do that, I'd love to ask you guys if you could do me a huge favor and click on that like button right now. Also, make sure to hit that subscribe button for more money-making videos like this. Now, at the end of this video, I want to give you a handful of strategies that will help you get started investing, even if you have little or no money right now. And I think we could all agree that making money while you sleep is a lot better than working for 30 years at the job that you hate. So with that, let's get started. There are three ways to get started making money with real estate, and I'm going to show you all of those ways today. But the first one is cash flow. Now, cash flow is basically when you have all of your property expenses. If you're renting a property for an excess amount over what your expenses are, that's the amount of cash flow that you take home per property. Now, in this video, I'm going to be breaking down essentially what it would look like if you purchased a $100,000 property and what the cash flow would look like for that property. I'm also going to be going over the second thing, which is appreciation. Now, appreciation is what happens year over year, and different markets are going to appreciate at a different pace. So for this video, I'm basically just going to break down what a $100,000 house would appreciate at if it was just an average appreciation of around 4% per year. And the third way that houses can make you money and real estate investing can make you money is through what's called principal paydown. Now, this one, again, I never really calculate when I'm actually purchasing my investment property, but again, it's still something there that I like to call the hidden treasure, because your tenants are paying for a savings account for you, and your house is the bank. Imagine every single month that your tenants write you a check and you're able to pay down your mortgage every month. That extra principal payment pays down that total loan amount. So again, I think this is a little hidden treasure that a lot of people forget about over time, but I'm going to show you how all three of these play a part in making sure that you become a millionaire. Now again, this is not an overnight thing. It is going to take time, but again, I'm going to show you exactly how, if you just got started with investing today, you'd be able to do this. Maybe you're just getting started investing in real estate, or you've been investing in real estate for a long time. Well, I do have a real estate investment group called the Real Estate Property Warriors, and I want to invite you guys to join that group, because inside that group, these exact same strategies that I'm talking about today is how other people inside that group have purchased millions of dollars worth of real estate in the last 3 to 5 years. There are people in that group that have become a millionaire in less than 5 years just by following these strategies and compounding their investments over time. So I want to invite you to join that group. It's free. I will drop a link in the description section below. So head over there, join the group for free, and introduce yourself and let people know what you're working on. So I'm going to go over to the computer screen here now, and I'm going to show you basically a breakdown of what it would look like if you were to buy real estate, and how much that would cost you for a down payment, and how the cash flow, appreciation, and principal paydown will make you a millionaire over different time periods. So let's check that out now. Okay, so here we are. This is just a very simple Excel sheet that I created to demonstrate how, if for every $100,000 worth of property that you purchase, what that would look like. Now, for example, if you were to purchase a $100,000 property, traditionally you're going to have to spend about $20,000 down to make that original down payment. So this chart right here is going to show you the amount of cash flow per property that you could expect for a property that's worth around $100,000. Now again, this is just one property. So if you were to buy a $100,000 property and put $20,000 down on that property, that property should generate you around $200,000 per month. Okay, so maybe you're just watching this video and maybe you've bought a property in the past and that property wasn't generating $200. Now that's okay, but this is an average for a 5-year period, because sometimes when you buy a property, you're only gonna get maybe $100 a month in cash flow right off the bat. But over a 5-year period, you should be able to raise the rents on that property. So that's why I put an average rent of about $200, and that $200 a month is going to go out through the 5-year period, 10-year period, and 20-year period. So this is just an average cash flow of $200 per month for a property. So $200 per month cash flow would generate you about $12,000 in a 5-year period. So in 5 years, if you're making $200 per month on that property, you would generate about $12,000 in cash flow. Now again, you only put down $20,000 and the additional cash flow would be about $12,000. Now, and again, going back to that 4% per year appreciation, well, in a 5-year period, if that property that you purchased was that $100,000 property that you purchased, in 5 years, that property would appreciate to about $120,000 value. Now, this is why it's really cool to buy real estate, because you're banking on the total value of the property. Now, the last thing here is the principal paydown. For a principal paydown, what I like to use is mortgagecalculator.org. And I just put the home value in here of $100,000, a down payment of $20,000, and a loan amount of $80,000. So when you come down here and you press calculate, it'll tell you what the total mortgage payment will be per month. But what I'm actually more interested in is the amortization schedule. Now, the amortization schedule is the amount of principal that is getting paid down each year by your tenants that are renting your property. So in that 5-year period, actually it's probably better if we go down to the monthly chart so you can see it. So this video is created in September. So I want to go from September 2020, which you can see right here. The first month they're going to have the principal pay down would be about $120 for the first month. So on that $100,000 property, your tenants are putting $120 into your savings account, the house, every single month. So in a 5-year period, scrolling down here to September 2025, you can see that they essentially paid down about $8,000, right? Because your mortgage payment or your loan amount was $80,000, and after they make those payments every single month, you're down to about $72,000. So they have generated you about $8,000 in principal paydown. So if you add all of those up in a 5-year period, you've made $40,000. Now, before we go down here, I want to kind of show you how this works in a 10-year period. So in 10 years, you would generate about $24,000 in passive cash flow. You would also have a property that appreciated to about $40,000. So that $100,000 property after 10 years would be worth about $140,000. And your principal pay down after 10 years would be another $18,000. So if you just purchased a $100,000 property today and you put $20,000 down on it, in 10 years, you would make about $82,000 in net worth. Now, scrolling over here to the 20-year period, right? So if you just got started today and you bought one property for $100,000 just today, in 20 years, that property would generate you $48,000 in cash flow. It would generate you $80,000 in appreciation. So that $100,000 property over that 20-year period would be worth about $180,000. And down here in principal paydown, your tenants are going to be paying about $42,000 in principal paydown to that savings account of your house. So in a 20-year period, that would generate you about $170,000. Okay, so again, this is just one property. Now, a lot of people are thinking, okay, well, maybe I don't have $20,000. Again, at the end of the video, I'm going to teach you a few different strategies that you can do. Again, this assumes a $200 per month cash flow. In 20 years, that property, you're going to be able to raise the rents, because here's what happens. After about 3 to 5 years, the tenants being there, the market value of rent in your market typically also goes up. So $200 may be a pretty consistent number for the 5-year period, but in about 10 years, you're going to be generating probably closer to $250 or $300 a month. And in 20 years, you're also going to be making a lot more than this. So these are just very safe numbers, because I want to make sure I really break it down for you. So say you want to become a millionaire in the next 5 years. You want to get started right now, and you're very hungry to do this. So how many $100,000 properties would you need to make $1 million? Well, to make $1 million, if you're buying all these properties at one time, you would need 25 properties that are doing exactly this, right? Making you that $40,000 in that 5-year period. That would generate you the $1 million. Well, if you needed 25 properties, that's about $2.5 million worth of real estate that you would need in order to do this. So again, if you needed to put 20% down, that's going to cost you about $500,000 in liquid cash right now today to be able to generate $1 million in a 5-year period. Real estate investing is not a get-rich-quick scheme, but it can make you $1 million over a period of time. So let me show you how that by buying one property today over a longer period of time will get you to that $1 million. So in 10 years, that same property, you wouldn't have to come up with as much cash, because you would only need about 12 and a half of these properties. In other words, you would need about $1.25 million worth of real estate, total real estate owned, and about $250,000 to be able to do this. So maybe you don't have $250,000 and you're starting like me. You know, I didn't really have any money saved up when I first got started investing in real estate. In fact, I actually had about $28,000 in my bank account when I bought my first home. And I bought that with a different strategy, again, that I'm going to tell you guys at the end of this video. But I didn't have $250,000, but I was able to get to $1 million in under 10 years. So the strategies that I'm going to give you as like little bonus tips at the end of this video are going to be how you guys can do this in about 5 to 7 years. If you really want to become a millionaire in this business, you can easily do it in 5 to 7 years. Now, again, I know people in that Real Estate Property Warriors group that have been doing this for much shorter periods of time, about 3 to 5 years, because when I got started investing in real estate, I didn't really have a coach or the training videos or the YouTube or the books. I didn't have that resource. So you are much smarter than I was, because you're actually looking out and you're watching this video. Now, I'm sure that you probably know other people that are interested in making money, because you know, you are who you hang out with. Now, if you know some other people that are interested in becoming a millionaire, make sure you share this video with them, you subscribe, and you like this video so that way they can see this video too. So again, moving forward here, if you just bought a $100,000 property today, right now, in 10 years, you'd make $82,000, but if you bought 12 and a half of these properties, $1.25 million worth of real estate, you would need about $250,000 to be able to become a millionaire in 10 years. Now, in a 20-year period, if you did the same thing, you bought this one property, you would have to buy about six of these properties to be able to generate enough wealth to get you to that $1 million. And again, 6 properties, $600,000 worth of real estate, $600,000 worth of real estate, you would need about $120,000 to be able to generate that $1 million in net worth. So that's how you become a millionaire in real estate. Again, it takes a little bit of time. And again, maybe you don't have the $120,000 right now. Well, again, this is just buying one property. If you have $20,000, you know, these are pretty healthy numbers, right? But if you want to make the $1 million in a 20-year period, you would need at least 6 properties to be able to do this. This is just the basic form. Now, there are other strategies out there that can really accelerate this. If you guys join the Real Estate Property Warriors group, I can show you some of those other strategies. But just because you guys stuck to the very end, I want to give you some of those different strategies, and I hope that these strategies help you with your real estate investment journeys. Okay, so strategy number 1, house hacking. Now, I don't know if you've heard of the term house hacking, but I did write a #1 best-selling book on Amazon called Military House Hacking, which talks about how veterans like myself are able to buy a house and we're renting rooms out to generate additional cash flow. So maybe you have a property that you want to purchase and you can rent out additional rooms inside that property. I've even heard of people buying a property and renting out individual rooms and covering their entire mortgage and making additional cash flow. So look into house hacking if you're thinking about buying a property today, because that'll generate you extra wealth also. The second model is what I call house stacking. Now, house stacking is very simply put, as I was showing you, you can buy one property for $100,000. Well, after a couple years, you're going to be able to make enough money that you have enough extra cash to be able to purchase another property. So while it would take you 5 years to generate that amount of money that I showed you earlier, in that 5-year period, you might be able to buy another property. So now you have 2 properties working for you. And then that's going to accelerate how much cash flow you make over time. So 2 properties might take you that 3rd year. In the 4th year, you may be able to buy another property. In the 5th year, a couple properties. In the 7th year, you might be able to buy yourself 3 or 4 properties. So that's house stacking. Just start with one, and then after that makes you a little bit more money, you can move on to buying the second property and compound that growth exponentially. The other way is through raising rents. When you raise your rents, it's going to increase the amount of cash that you're generating. Again, taking that extra cash and buying more rental properties is going to get you to that $1 million mark much faster. Again, that extra cash flow every year will do the same thing. Over time, it's going to generate more and more and more cash. So it won't really take you that 20-year period if you start to raise your rents. The fourth way is lines of credit. So I showed you how in a 5 to 10-year period, you have all this extra principal pay down and appreciation on your property. So if you took that principal pay down and the appreciation of your property, a lot of times you can go back to a lender and you can ask for a line of credit. Now that line of credit will depend on how much actual appreciation you have in your property and how much you've been able to pay your principal down in that period of time. But that line of credit, you can actually take that and you can buy more properties. So just like the house stacking model, as you're buying more properties over a period of time, you're going to increase that amount of cash that's coming in. You're going to be able to do the same thing with this appreciation and principal pay down, because you're going to be able to get more lines of credit. I know it may sound a little confusing, but I'm just very simply put, if you bought one property today and that property appreciated by about $20,000, you can go back to the bank and you can get that $20,000 out of the property in the form of a line of credit, because your first original mortgage is already covered, and they're going to give you that extra capital to be able to put back to work. Okay, the other thing that I want to talk about is tax benefits. Now, there are a lot of different tax benefits. In this whole video, I don't want you to get too confused, but there are tax benefits like a 1031 exchange, where you can take one of these properties that you bought for, say, $100,000, and when it appreciates in value, whether that's through raising rents, the market appreciating, or forced appreciation by doing renovations, you can do a 1031 exchange and buy a larger property. So a $200,000 property is going to cost you about $40,000 to buy. Well, if you bought a $100,000 property, you put $20,000 into it and it appreciated, and you sold that property, you would have about $40,000 worth of money to use. So you can roll that into a bigger property, the down payment on a bigger property, and without paying taxes, as long as you do what's called a 1031 exchange. Now, just like the cash flow, I didn't really talk about how your taxes of income would be affected by that. Well, that's because you get depreciation on your property. And that depreciation for the property is just basically saying the government is going to give you a benefit for owning real estate. And that really almost covers your cash flow per month. Okay, so you want to buy real estate, right? And maybe you don't have $20,000 down, where there are 2 programs that will allow you to get started investing in real estate today. And one of those programs is called the FHA Home Loan. The FHA Home Loan is basically a loan that's about 3.5% down. So if you don't have $20,000 and you want to get started investing in real estate, well, you can buy a property for as low as 3.5% down, which would mean on that $100,000 property to get started immediately, you would only need about $3,500. You would need additional closing costs, but again, if you join that Real Estate Property Warriors group, we can teach you how you can get the sellers to actually pay for your closing costs. So you can get into a property, $100,000 property, for as little as around $3,500. The other option is, again, it's only for veterans like myself. So if you're a veteran and you're watching this video, first of all, thank you for your service and I appreciate you. Again, go over to my website and pick up that military house hacking book so we can get you guys on your investment journey. But if you're a veteran, you can buy a property with 0% down. So you can actually buy one of these $100,000 properties and put nothing down. Okay, so we covered a lot of stuff, right? We talked about how you can buy a property today and you can generate $1 million worth of value over an extended period of time just by using your cash flow, your appreciation, and your principal pay down. I really want to encourage you guys to get started investing in real estate. I did also write a book called How to Buy Real Estate with Little to No Money Down. That's at mitchdurfee.com. I will drop a link in the comment section below, but hopefully you found a lot of value in this and hopefully this answered a lot of questions about how you can become a millionaire through investing in real estate. If you have more questions or you want to learn more about how you can invest in real estate, whether it's single families, multifamily real estate, or anything else, reach out to the Real Estate Property Warriors group and we can help you analyze deals, help you find deals, connect you with other agents and hard money lenders if that's what you're looking for. So thanks for watching this video. Again, if you stuck to the very end, I want to ask you one more time to make sure you smash that like button, hit the subscribe button, and drop a comment below and let us know what you're working on to become a millionaire. Take care.
You who pursue excellence at such an enormous level and actually attain it. Mitch Durfee, CEO, best-selling author, keynote speaker, business coach, realtor, and veteran, has built an empire of business and now coaches, provides mentorship, and the advice you need to ensure success in your life. Founder of Grunts Move Junk, Green Rock Investments, and online startup Box, Mitch Durfee has constructed and created a lasting empire with lasting impact and devotion to your success. A believer in education, wealth creation, and knowledge development, Mitch Durfee is the mentor you need and the mentor you want on your team. Learn more at mitchdurfee.com. That's mitchdurfee.com.